Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Applied Digital, ticker symbol APLD. And so here I am recording this on the evening of Thursday, May 16th, after Applied Digital closed at a price of $3.66, being down about $3.68% on the day and being flat in the after hours. And so I wanted to go over this chart because it was recently requested during a live stream, and also because it's been a while since I put out the last video, which came out on April 16th when we closed at a price of $2.45, being a little bit below this red line here at $2.51, or really below $2.50, being a psychological level there. And at that time I was thinking that if Applied Digital could not reclaim that red line before the end of the week, it would likely be going down. And I was wrong. And so on Friday of that week, which was April 19th, we did close at $2.40. But the following Monday, price went up almost 10% on the day, closing at $2.71. And from the lows of $2.36, price is currently up over 50%, getting as high as more than 60%. So a pretty great run there. And so I just kind of wanted to go over some of these levels to get an idea if it could be topping, if it is, what levels it might be pulling back to, and if it will continue going up. And so the levels that I have drawn up here are some are, historical that I have gone over in previous videos, but I have also just recently done this Fibonacci retracement here, going from the high hit on January 10th, which was at a price of $8.65, and then coming down to the low of $2.36 hit on April 18th. And so from that retracement, we can see the 236 is at a price of $3.84.4, and it does look like current price is struggling to get and hold above that level. Yesterday on the 15th, hitting a high of $3.82, so just below that level, and then today on Thursday, getting a high of $3.93.5, wicking above that level, but then closing well below it at a price of $3.66. So I'm kind of wondering if price will be pulling back to $3.50 to test that as support. It was resistance previously on April 12th with a wick up to that level just approximately. And if I do throw up the volume profile, it does actually look like there's not too much support there, and that really most of the consolidation is down here right around $3 a share. So I feel like worst case scenario, it would be pulling back to that level before finding support. But I feel like more likely it will consolidate above 350 and continue higher. And the reason why I think that is because when this bear flag was formed, this sideways consolidation before a breakdown, we do have this uptrending level of support. And so that prior support may be acting as resistance in the future. So I could see a test of that level, potentially getting to the 382 of the Fibonacci retracement, just this white line below the yellow one. And so that is at a price of $4.76.3, whereas the yellow line is at $4.86. So with those two levels being there right around where that uptrend is, I could see price getting rejected from that level before pulling back, maybe finding the 236 right around $3.84 as support before consolidating more and continuing higher. But if it's not able to get above 384 and hold, I would definitely expect to see a pullback to 350. See how price action behaves around that, and maybe we get a bounce up to right around $4.86. But if this does not hold, $3 does make sense, not only because of this consolidation that would be acting as support, all that price action below $3, and also $3 just being a psychological level, $3 bills, price could be coming down to that level. So do prepare for that if it does happen, have a plan for it at least. But I do think that getting up to 486 does seem pretty feasible. And I did just want to take a step back to show really that this orange line at 350 that we've just gotten above was prior support over here. So this was on November 13th, getting a wick down to $3.52. So with that having been prior support from that wick down, it wasn't actually that much resistance on the way up. What really, seemed to be more of a challenge was getting above this downtrend based on these two pivot points over here. And because there was a little bit of a struggle with on May 1st, getting a wick above that level, but not being able to close above it, having to consolidate a few days before breaking above it, that may be a level that we may retrace to. So do be cautious of that. And if it does retrace to that level, that could also be forming a double bottom. And so if price, worst case scenario, if it breaks below $3 a share and comes down to $2.50, I think that could be a great dip buying opportunity, because not only would you be having the formation of a double bottom, you'd also be retesting this downtrend that did act as resistance here. And that could be serving as a launch pad to then get up to 486 and or higher. But I would look for, in the more immediate future, a hold of 350, because I think that will be acting as support. And I do think that price will be getting up higher. But do keep an eye on the levels in case that does not happen. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.